Well, we learned today that Canadians are spending more of their income to pay down debt than ever before, at least based on the record keeping from Stats Canada. We're talking about the so-called household debt service ratio. It tracks the total payments, both principal and interest, that Canadians pay as a portion of their disposable income. That number has surged since the Bank of Canada began raising interest rates, now stands at more than 15%. For some tips on how you can deal with your debt load, we're joined by Scott Satov of Loans Canada. Scott, thanks for joining us. When you see a chart like that, what comes to mind just based on what is happening with your own business right now?
Sure. You know, I see a lot of problems and issues for Canadians who are struggling with high debt, especially now with the holidays. I'm hoping, and I see some signs that inflation is cooling, and I think for next year there might be a stall or a hold in the rates, which I think will really help Canadians who are struggling with home high prices and a lot of debt and trying to get underneath of that.
Yeah, well, I want to dig into that because it happened quickly, right? That's what we cover in the markets every day, how fast this interest rate hike cycle has been. If you're looking for a starting point with what to do with your debt to better manage it, what are some early ideas there?
Sure. I think it all starts with financial literacy and really understanding your own position. People have to be well informed, understanding all their options, and there is a lot of options out there. You can speak to professionals about how to deal with your debt. You can speak to licensed insolvency practitioners who might help you get out of those debt. And of course, the government has introduced some new first-time home buyers programs and other stuff to help deal with all those problems. But I think Canadians have to be vigilant as they go into 2024 after remaining resilient for 2023 with all the changes.
You know, there's all sorts of places we could go, but let's go to one thing that's come up in the mortgage market, which is, amortization. So trying to, if your bank allows for you to basically change the length of amortization, which, maybe for the broader economy raises some questions longer term about, how much of your debt you're actually paying off. But in the short term, is there a way to get my payments under control?
Sure.
What's happening in the conversation around existing mortgages right now?
Sure. I mean, I think the first important thing is to really understand your position and speak to mortgage professionals so you really understand if you're in for renewal, when that renewal will happen, how much your costs are going to go up in a month. And then, of course, making room in your budget to afford your house as your primary residence is very important. And obviously, some things are going to have to give in your budget.
And this is a story that's going to play out over the next few years because you've got a lot of people who are going to be renewing their mortgage, even if like they're locked into a fixed rate mortgage right now. The economists keep talking about the fact over the next 2 to 3 years, you're going to see a lot of people, because of the duration of our mortgage market, they're going to have to re-up. So maybe figuring out the numbers on what that change is going to look like?
For sure. The renewal is a big thing. Already, mortgage costs have increased 40% over the last 3 years. And I've heard some stats that your payment could double. But generally, on a $500,000 mortgage, you're looking at about $1,000 extra a month if your renewal is coming. But it depends on what rate you had before. Are you fixed? Are you floating? And that's why I suggest a mortgage professional can really help you and guide you to make some informed decisions.
You mentioned the holiday season. Is that just because this is a time when people are making additional purchases on their credit cards and,
Sure.
and the like?
Yeah, there's no doubt about it. People are faced with this high debt load and they don't want to leave their family stranded. They still want to provide gifts, but they're looking ahead and trying to figure out what is the best way to do that. And of course, in the holiday season, there's new credit forms, and you got to be careful and informed of what you're buying and what you're using so they don't get in over your head.
And any suggestions just on dealing with your credit card debt, like starting a conversation with the bank, or again,
Sure.
checking what those rates are or how those rates have changed?
There's a couple options for you. There's always something like balance transfer credit cards and sometimes debt consolidation loans. And there, what you're trying to do is exchange higher debt with lower debt. And of course, if none of those are going to work, it wouldn't be a bad idea to talk to a licensed insolvency practitioner to see if you're going to be able to make all your payments.
Okay. And you can start that process with a number of
For
options,
sure.
Even at your bank branch.
Yeah, of course. Getting informed is the first thing. Understanding rates, understanding what your renewal will be, trying to calculate exactly how much that's going to impact you, and really just trying to understand how is your family going to maintain its level of sophistication next year while they're faced with all these challenges.
And any other tips for people who are trying to figure out how to deal with their debt load going forward?
Sure. I mean, I think people have to be aware of the new credit forms that are out there. Today, you can go to the cash, and if your credit card is full, they'll be offering new buy now, pay later solutions. Be wary of those. They're instant, they're very easy, they're accessible, but they might not be the right thing for you, especially if you're over your head with debt.
Right. There's even some publicly traded companies, and
sure.
their stocks sometimes pop on the excitement around that. But you're saying that you buy now, but the rate that you're paying is something you have to be watching for when you're ultimately paying later.
100%. It's debt. Yeah. It really is debt. It might come in as a fixed payment schedule, but at the end of the day, it's just adding to your debt load.